Hey everybody, welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we are heading into, what could be a fun-filled Tuesday. So we're going to do what we do each and every day here in the Daily Market Commentary. We're going to look at the same 10 to 12 futures markets, identify potential technical reversal points, breakout trades, and things of that nature. One of the things, for those of you new to the channel, welcome. Glad you're able to make it. We do not take away lines on the charts, and the reason we don't take away lines on the charts is I want you to see how trades play out over time. It helps hold me accountable. It helps hold you accountable, and helps you to realize that it's okay to take losses in trades, because I want to show you every single time that we do. An important component of this, by the way, if you guys are not already aware, is to follow our feed on Twitter. If you follow my feed on Twitter, oftentimes I will put trade updates in the Twitter feed of some of the things that we talk about throughout the day. So let's go ahead and get rolling. Starting with the S&P. The ES yesterday, big rally up after a breakout. So earlier in the week, I had talked about a breakout above this area. We got the breakout, and then it just really kind of chopped around and did nothing until the end of the day yesterday, where we saw a really strong rally higher. Now that strong rally higher was really on fairly low volume. I had retweeted Joe Soffer had pointed that out, that we had really low volume on the ES yesterday on this big move up, and that's something to always kind of consider. We are almost back near our highs, especially in the Nasdaq. I think in the Nasdaq we're 1% back off the highs, but we are not necessarily doing it with a tremendous amount of oomph. So, keep a lookout, if you would, for a fairly violent pullback. I think that could happen. I think we could get, I don't think it's going to be violent like this, but I think that we could get a pretty quick rip. And I think that we've got some areas of potential buying below us, but just be aware for the possibility of a fairly quick rip. So I'm not going to add any lines to the charts. I think that we've got a fair amount of tradable opportunities already listed. If you want to go back and look, this 15-minute area is this little bit of chop before this drop. Now I will tell you, I'm a little concerned that it did get kind of retouched right through here. So it does weaken it just a smidge. So be aware of the arrival coming into there. Just because the lines are there doesn't mean that we blindly take the trades. You still have to make sure that you've got enough profit margin when it comes to it, and that your arrival is strong enough for you to expect a decent move out of it. Looking at the Nasdaq, so the Nasdaq, we opened up on Sunday. On Sunday, we opened up right into this area here, which was our selling area, and I'm almost immediately I tweeted out, opened up in the high, manage your stop accordingly, and to the point where you got a little bit of a quick move out of it, and then that's a time to move your stop to break even, because it's just there was so much bullish momentum there that it didn't hold true. So that's why I talked about earlier today, always make sure that you're taking a look at the Twitter feed and seeing kind of what I manage. Now, certainly it doesn't mean that you have to follow the same things that I'm putting in there. Those are just, educational examples from a technical perspective. You certainly need to manage your own account to fit your risk profiles, and you don't want to take anything unless you fully understand it and feel comfortable with it. So in the NQ, one of the areas that I do want to point out, though, is this area right here, where we had this pop higher, a little bit of a base, and then another pop higher. Very similar to some of the areas that are below us in the S&P. I'm gonna mark this off in the Nasdaq. This is a fairly small region, fairly small area where we are kind of put together in there, and depending on the arrival into here, this may or may not work out to be a pretty effective spot. But why am I taking this? Well, a couple of things. First of all, looking at this rising high, rising lows, same highs, that is a classic ascending triangle pattern. Now, we didn't have quite enough touch to make it a true ascending triangle pattern, but we definitely had that breakout. Now, when you think about what's happening here, right? What's happening logically, right? What's happening? Well, every time price hits this area and comes down, it comes down because there are a lot more sellers than there are willing buyers at this point, and price drops. But we use up a lot of the sellers. So the next time we come into here, we drop a bit more. but we use up some more of those sellers. And when next time we come here, we drop a bit more. Now, every time that we hit this area up here, not only are we using up the existing sellers, but we're starting to create an inventory, if you will, of willing buyers and people that want to buy. Now, why do they want to buy? Well, a lot of them want to buy simply because of the breakout above that high. There's a lot of algorithmic style trading that goes into play in things like this, because when prices break above prior resistance, a lot of computerized trades start to get in and boom, we get the pop up. But a lot of those trades get in on stop limit orders, meaning that they say, okay, if we get above here, get me long, but don't get me long up in this range because it's too high. So some of those orders remain unfilled. And when price returns to here, that's where we may see a little bit of a reversal. The second thing I like about that is that it served as a resistance in the past. And this area here of old resistance can become new support very easily. A third thing is whole round number. 68.50. So why 68.50? Well, 68.50, 69, 68, anything in increments of 50 in the Nasdaq are going to be, where you just have piles of orders that sometimes tend to accumulate. People love to gravitate towards whole round numbers. So there's my reasoning and my area in the Nasdaq. Looking at crude oil. Crude oil, I feel like we have pulled back a little bit, but still not to the areas that I'm willing to step in and buy. And certainly we're not to my areas where I'm willing to sell yet. So I'm kind of still just chopping along in between. Now, the other thing is that even on this hourly chart, we're seeing a very big weakening in momentum. What do I mean by a weakening in momentum? Well, look at, we had the rally up. We had this pullback, and now we've had this pullback. Look at the length of the trend lines. So I'll put them on an even playing field here. Look at the length of each of these pullbacks. The first pullback is shorter. The second pullback is a bit longer. And the third pullback is even longer. Now, the third pullback doesn't have quite the same fervor to it. It's a little bit different of an angle, but notice that it's longer than the first and the second pullback. So deeper pullbacks, longer pullbacks, what those mean to us is that our momentum is shifting. And the way to think about it is think about throwing a ball up in the air. If you throw a ball up in the air, it's rising, and the whole time it's rising, it's slowing down until eventually it reverses. So just keep that in mind when you're looking at potential trades, that I might be better off looking for a short here real soon. Not quite yet, because I don't have a higher swing, a lower swing high or a lower swing low, but just something to consider. Now, so for me, I'm going to leave just both of these areas in play as they currently stand here for crude oil. So let's take a look at gold. So gold, we are getting what could be a potential breakdown in gold. This is what I look for in breakdowns, where we have some room to run if indeed it does break down. Now, why do I see there's room to run? Well, I don't feel like we're going to get a huge bounce off of this area here. We got this huge pop up. We got this big pop up here Sunday in the overnight trading session, and then yesterday we put in a couple of bottoms. So to me, there's a better chance for a break off to the downside, but I'm really just going to let this thing be because I want to just sit back and wait until I get to a high probability point. So a breakdown makes the most sense to me. And if you're gonna do something, I think that there's a breakdown potential below this area right here, this 1332 region. You do have to be a little bit aware that this could act as a stopping point, but I think that we could get a breakdown out of there. So keep that one in mind. I'm not going to leave a line on it because I don't love it quite as enough for me to jump in there on my own. But I know some of you do. Some of my gold bugs out there. All right, looking here at our bonds after our rollover gap. We certainly have the rollover gap in play, so I'm not playing this as a big old gap opportunity. So I'm going to still look. I still have my bearish overall sentiment in the bonds. There's no reason to think otherwise. When I go over and slide in this and look at this in the daily chart, my daily trend continues to go down. Matter of fact, to the point where I've rolled most you know, most bonds are falling now faster than the yield is going to pay me. So even though I've got higher yield, the lowering price may not make it as good of a value. Now, if that thing continues to fall as the market continues to go up, eventually then is when we see time to transition from one to the other. But right now, that's just not the case. So lots of sell areas up above us that we've been unable to hit, and that's why we're going to have to probably trade a breakdown. So my breakdown right now in the bonds is going to be below here. So if we get below here, I think that's where you see your next shorting opportunity would be a breakdown below this region here. Now 120 could be a pretty significant area, but going all the way out even to the weekly here, I think that there's still room to fall down to this 117 region. Looking at the Aussie, so the Aussie, we'd had our short from this area way up here, which worked out very, very well. We're now kind of putting in some more actionable price patterns in here, and those actionable price patterns I think are going to be on hold. We're gonna hear some more news come out of the Fed, and so with pretty much all currencies, if I look at all these currencies, there's the euro and Canadian. I don't have any levels right close to me in any of the currencies that I'm in love with, and the reason being is because I'm not sold on what the Fed's going to do. Looking here at the British pound, I got some areas far away, and even in the Japanese yen, I've got some areas, although it's a bit closer than the other two. So my point is that when we have the Fed who's going to speak on inflation, and our last humongous move was blamed on inflation. If we see, that we are gonna continue our more aggressive rate hike strategy, then we may see something much more violent in our equity markets. Excuse me, in our currency markets, which is why on the bonds I've got a breakout trade. I'm not looking for necessarily a reversal one way or the other, but I've got a breakout in play, and I would look to kind of follow what happens. So I'm gonna leave all the positions that we have in play that have already been identified, because those are still high probability areas. But I'm not going to necessarily add anything new until I hear a little bit more about what comes out from the macro scale. So with that being said, I'm going to turn this thing down for the day. If there's anything I can do for you, please don't hesitate to reach out. Shoot me an email, chuck@iiefinancial.com. One of the things I get a lot of calls from people asking me exactly what we do there. We are helping people to manage their finances for their retirement accounts, and for some of you that are traders, that may not be the right fit, but I'm sure you know somebody in your life who has wondered about this whole investing thing, and they just want somebody who can help them to do it in a way that works for them. So hope everybody has a great day, and if there's anything I can do for you, once again, please feel free to reach out. Thank you so much, and have an awesome time. See ya.